My name is Stephanie Alexander. I'm the director for the Memphis Area Minority Contractors Association. For the next hour, we will be discussing bonding and insurance. Our first panelist is Mrs. Sandra Burgess. She's the manager for the City of Memphis Risk Management Services. She graduated. Can y'all hear me?
Yeah.
Okay, I'm sorry. Let me get this together. She's a graduate of the University of Memphis with a major in insurance. Ms. Burgess has over 25 years of experience in insurance and risk management field. Her initial career started as a commercial underwriter for Nationwide Insurance Company. She later transferred to the claims department where she handled personal and commercial liability claims. She is a member of the Claim and Litigation Management Alliance, CLM, the Public Risk Management Association, PRIMA, and she currently holds Vice President of Tennessee PRIMA, where she has been featured in several articles with the CLM. Please welcome Mrs. Burgess. Secondly, we have Mr. George Hillard. Mr. Hillard is the president and principal for the Memphis Independent Insurance Agency, Pete Mitchell and Associate. He holds both a certified insurance counselor, CIC, and a certified professional insurance agent, CPIA, insurance destination. He is a graduate of the University of Mississippi Ole Miss, where he was inducted into the Ole Miss Alumni Hall of Fame for outstanding contribution to this profession. Please help me welcome Mr. Ron Merritt is our first. Mr. Merritt is the president of the Financial Center. Oh, I'm sorry. Look, I got off the papers. Ron Merritt is the president of the Financial Center. He provides insurance and service and financial service to individual and business over the last 25 years. In 1999, Mr. Merritt began the Financial Center of Tennessee, a full-service insurance agency that specializes in insurance. Mr. Merritt provides products ranging from liability, property insurance, bonding of all types, and financing for construction projects to small and medium companies. Please help me welcome Mr. Warner. And last but not least, my friend, Mr. Rick Powell. Mr. Powell is the principal of Harris Magna Powell. He has over 30 years experience with the insurance and surety and bond business. He's a graduate of the University of Alabama School of Business. He also is the founding director of the Trump Bank and the director of the Palmer's Home for Children. Please help me welcome Mr. Powell.
Thank you.
Okay, I'm gonna probably do this a little bit different than what y'all are accustomed to. I like interaction. I like for my crowd to get involved in what's going on. So to start it off, we're going to start out with our first question. And then feel free, it's a very small crowd, so feel free to raise your hand if you have any comments or if you need them to elaborate just a little bit longer, or if you have a question that you would like to ask. My first question is, and Mr. George Hillard, if you could explain the difference in insurance and bonding. What is the difference in the two?
As far as the difference in the two, insurance is actually what we call it is insurance. Bonding is normally you go to an insurance agency for bonding, but it's really not what we call an insurance, true insurance product. It's sort of a standalone type of what we call the bonding is where you actually guaranteeing that you will perform in a certain way once you agree to take on a particular job or whatever. Insurance is where you actually go and pay a premium for something in case you have an accident, or if there's someone to damage something that you own, or you are involved in an accident, or someone come to your on your property, slip and fall. The insurance is really something that you're insuring against loss. The insurance company taking on that risk in case that something happened to you or happened to your property. Again, bond is more I wouldn't necessarily say it's a financial product, but it's really more in that line because it's sort of guaranteeing that if in case you fail to perform in a certain way, that the guarantor, I mean the surety company will step in on your behalf. So those are two, they're really two separate items, but yeah, normally you would go to an insurance agency or insurance professional to get that.
Thank you. Mr. Powell, could you explain the different types of bonds that are and their purpose?
Well, surety bonds are used in many types of businesses, of course, and I'm not sure if the focus here is construction, but of course they're most commonly seen in the construction business where, as George mentioned, it's a surety function where the bonding company or the surety post an obligation on the, in this case, a contractor or the principal's behalf to guarantee. In the case of construction, it would be to guarantee either a bid or the performance of a construction contract. The function of the well, let me back up. There's other than construction, there are some other businesses that also require surety, and that would be to also the same function as a credit function or a guarantee function to guarantee some obligation. An example would be if we have a client we do business with that handles a lot of automobiles that they sell, or they handle the reselling of automobiles that come off of from companies that provide leases. And the company, in the handling of those automobiles, the lease company wants a guarantee that they will dispose of the car and reimburse what they're supposed to according to their contract. And some of those transactions require bonds. Also, you see the government entities requiring bonds. If you're in the restaurant business, you'll know about tax bonds, particularly for liquor tax bonds that in this case the state of Tennessee and other states require. So the actual bond instrument, there are lots of different applications in various businesses. By far the largest is in the construction world, but again, it's a surety function and it's a credit function, and the evaluation, or what we refer to as underwriting, is much like the underwriting you would undergo at a bank to get a bank loan.
So is there a premium for a bond?
Yes, you pay a fee. You pay a bond premium. Yes, you pay a fee for the bond.
You have to personally guarantee it?
Yeah, well, that's the other piece of surety, which is much different from insurance. Mm-hmm. It requires indemnification, just like a bank loan would, where again it's surety. The surety standing in your place. They're pledging their credit to your obligation, and you pay them a fee for that. But also, if they're called on to fulfill your obligation, they will have recourse back against you through an indemnification agreement.
Oh, okay.
Yeah. Occasionally, you'll see sureties that would not require indemnification, but that's very, very rare.
You have any more questions?
Well, for a small business, like a brand new business that wants to get just general liability.
Okay, that's the next question.
Okay.
Okay, anybody else have anything? Okay, for my next question, Mr. Ron Meredith. For a small company just getting into the industry, being construction or a restaurant, what would be the most important thing they should understand about insurance, and what type of insurance should they seek out?
Okay. Okay. As a business starting out, you got different life cycles in the business. Of course, the new venture, and then you have the established kind of midlife, and then you have a well-established business. And general liability is a important part. The general liability says if something happens, if you go onto a business or another individual's property and you perform a job and you damage their property, that's what the general liability covers. There is a premium for that. There's no credit score or no credit involved. It's just you agree with the insurance company via the insurance broker to cover my business in the event that I damage someone's property. The bonding comes into play in the event you want to work with a particular company. They become the bonding company or the individual that's requiring you to be bonded. Bonding is like a blank check. You go to work for a company, they say, we want you to be bonded for $50,000 or $25,000, whatever the amount is. You're agreeing with the bonding company that I'm going to be financially liable to complete a particular job with this particular company. And the bonding company is stepping in saying, we are writing you a blank check, but we're not giving it to you. But we're writing you a blank check in the event that you don't perform up to your obligation. Then we'll step in and meet that financial obligation with that particular company. That particular event does require your credit, the bonding companies pull your credit, your financials, and so forth. So they are two different entities, two different type of policies. But you as the business owner, some circumstances, general liability is all that you need. And then if you're going to do business with the government or certain types of businesses, they may require you to be bonded or to have a bond in order to complete the process.
And bonding is like underwriting, like you say, a loan or something. Do they have different tiers? So if you have excellent credit, will you get a good rate?
Yes.
On the,
the pricing can be, and George and Mr. Powell can correct me, but the pricing can be anywhere from 1% if you have excellent credit to as much as 5%. It just varies on your credit, your financials. The bonding companies look at different things to determine what that percentage of cost will be.
And do bonds have to be renewed like insurance?
Is
it like a year, 12 months, 6 months? I mean, how often do you renew a bond? Is it yearly?
Different stages. Some bonds are annual and some bonds are sold on a 3-year basis. It depends.
When you go through the renewal process, does it go back through underwriting, or does it stay at the same rate you got it? I mean,
okay. The bond company does review your financials. So if you started out 2015 in great financial shape and through some cause you didn't finish 2015 out great, took some losses, some judgments, or whatever it may be, you will have problems renewing your bond on the second term, because again, you have to remember the bonding company is, for all practical purposes, writing you a blank check. So they want to make certain that in the event you do or are required through some crazy circumstances to the obligee is required to file a claim against your bond, the bond company is going to step in, pay that particular claim, and then they will, within 90 days, knock on your door and say, we want our money back. So they will not write you a bond without your finances being in order, because it would be bad business if they write a check to company A and then they can't get their money back from you. Now again,
what if there's like no claims, but anything, people credit change all the time. I mean, I work in the financial industry, so like if you have a bond and you go through the renewal, it's time to renew, and there's been no claims or anything, do you still have to go through like underwriting again, just to renew?
They would, all they're going to do is just review your finances. It depends on the type of bond. Some bonds, they won't check, they'll just send a notice saying it's time to renew. But if you have a surety bond for a sizable amount, the bond company will request your finances over again. 100,000, 200,000, those type of high-end numbers, the bond company will require you to be, they will review.
They look like a financial statement.
They will require you to send something in, yeah.
Okay, Ron, but what about liability insurance? Speak a little bit about, because I know with a restaurant, they wouldn't need a bond. Typically, the bond are used in construction. That's probably the industry that gets the most of them.
Okay.
So most people would need some type of liability insurance. So when coming into your office, and either one of you guys can take that question, coming into your office, what is it that the client needs to have prepared when coming to look for liability insurance? And also, what does it cover? What should we be looking for when we're looking to seek out liability insurance? Because I know you can go online and somebody might have insurance for $10 a month. Then you go to another place and they may have it for $500 a month. So why does that price vary like that? And what are we looking for when we're looking at liability insurance?
Okay, I will take it if you don't mind. When you said something about $500, well, let me say this. When you're dealing with commercial general liability coverage, it depends on the type of business you have, first of all. It's rated based on the type of business you own. And from that, you go with a minimum. It depends on, sometimes they rate it by payroll sales, payroll, sometimes by sales. So it really depends. And no one up here, I don't think, can give you an idea of the cost, because it really just depends on what type of exposure you have. And you would definitely need some commercial general liability coverage, because that coverage basically protects you if anybody claims anything regarding you're negligent, they slip and fall on your premises, they eat something and get sick, maybe the cart damaged their vehicle. All of that falls under commercial general liability coverage. So you would definitely need that coverage if you have a business. Another coverage you would need would be, is it okay?
Okay, go ahead.
Okay, workers' compensation. In the state of Tennessee, it requires if you have 5 or more employees that you carry workers' compensation coverage. But let me say this, if you have 3 and you don't have workers' compensation coverage, you're still not protecting yourself, because if someone files a claim against you and you don't have the workers' compensation coverage, you could be sued. Am I not right, guys? Okay, so you want to make sure, first of all, when you have your business, that you are fully covered. Another coverage, business auto coverage. And I know a lot of folks say, well, you know what? I don't drive my vehicle on business, but guess what? Sometimes you got Billy has to run and pick something up for the company, so you need hired and unhomed coverage as well. Can you all hear me okay? Because I'm going back and forth. But business auto coverage is very important, because, first of all, when you open your business, you want to make sure you're fully covered. And another coverage that you would need, possibly, could be employee dishonesty / fidelity bond coverage. That's a form of bond, but it's employee dishonesty, meaning you have your employees and apparently they're receiving some monies in. You want to make sure if something is missing, that's the only way you're going to be protected under employee dishonesty coverage. So, and then you may have some property that, let's say you have a business and you have a truck, I know there's a lot of food services now where it's in transit. Well, there's also some inland marine coverage that will pick up those type of contents or property that you have that are in transit. So you just want to make sure when you about to open your business, you discuss all of this with your agent so they know exactly what type of company they're dealing with. And let me say this, being an underwriter, first of all, if you can have 2 of the same exact business, The premium could be totally different because it depends on the exposure, it depends on your loss ratio, your history, what type of, if you've been having claims, if you have been reporting them timely. That's my claims part coming out. Because if you don't report any claims timely, then when the insurance company gets that in, then they're going to give you a reservation of rights because it's questionable because you're late reporting it. So it's just a lot of things. When you say insurance, it's not an easy thing, but I always tell people, I'm with the city of Memphis, and I speak with a lot of people that have their own businesses, and a lot of times they don't understand why we require all the coverages. And we require them, first of all, because when you open your business, first of all, you want to protect yourself first. Don't even worry about us. Protect yourself. And the coverages that we are requiring that they handle is basically for you to protect yourself first. After that, I'll discuss further regarding additional insured endorsement, but I wanted to let them know that it's important that you protect yourself. That's number one, because if not, you can close up before you open.
Blanket policies that cover everything, like workers' comp?
No, there's not a such thing called a blanket. Years ago, well, when I was first getting into the industry, we changed from the special multi-peril, which was general liability and commercial property. We went to a blanket protector, which had a lot of that. It had the inland marine, it had the property and the general liability. But you got to understand, your auto is still going to be by itself, and your employee dishonesty will more than likely be by itself unless things have changed, because I've been outside of the insurance industry for years on the purchasing side now. So these guys may be able to add something. Yes, ma'am.
Can you explain what is the umbrella excessive liability?
Okay, the umbrella policy is a liability policy, first of all, and it actually sits on top of your commercial general liability policy, because let's say you're in business and you have $1 million commercial general liability coverage, but you have losses. And let me say this, when you have a loss in commercial general liability, you only have $1 million for 1 year. So if you have a loss and you have paid $1 million, then guess what? You can't use that commercial general liability anymore for this particular term, which will be for more than likely 1 year. So what you would want to do to protect yourself, but you want to do it ahead of time, not after you sustain this, you may want to look into a commercial umbrella policy / or excess. Those are two separate types of policies, and they're a little different, because I think the excess is more of a separate policy, and I think they pay a retention, which you can pay a retention also under the umbrella, but a lot of times the umbrella falls in line after the underlying coverages have been exhausted. So you want to look into that, and if you seem to have quite a bit of frequency problem with claims or severity, meaning very expensive losses, you really probably want to look into some commercial umbrella / excess coverage to protect yourself. Did I answer your question?
So are the rates determined based on like the geographical location of your business? Like, how does that work?
Your rates are different because, okay, general liability, as I stated before, it depends on the type of business you're in. Let me just give you an example. Okay, an office versus a restaurant. No comparison. The office exposure is much cheaper, so the rate will be much cheaper for some commercial general liability for the office. Okay, the restaurant is another story. It's based on sales, first of all. So if you're doing a lot of business, I think it's based on sales. It used to be anyway, okay? Yes. So it would be dependent on what your gross sales is times a certain rate. But I can guarantee you that office exposure premium will be much cheaper than the restaurant, just to give you an idea. And construction is quite a bit too. And the roofers, I think they're just crazy with the price with the roofers, because that's a dangerous job. So you look at the type of exposure, and when we say exposure, it means the type of business, the hazard, or the likelihood that you would have a loss. And when you're doing construction work and things like that, or restaurant, it's a greater chance that you have a loss versus an office risk.
Okay, let me let Mr. George Hilliard chime in for me.
I was just going. She said that she was okay with the umbrella and excess. As Sandra said, there's a difference in the two. Your excess is normally just drop right over your underlying or what we call primary, which means that it doesn't broaden the coverage or anything. Umbrellas normally sometimes broaden the coverage. So when you start talking about under excess and umbrella, those, like she said, there's a difference. Excess normally is not broad. It just give you additional limits, higher limits. The umbrella, a lot of time, broaden the coverage. So for instance, you might be in the United States and the umbrella will cover all those, give you the limits, but then again, you might go outside the United States, and sometimes your underlying might not provide you the necessary coverage, but the umbrella may give you that coverage in another state, or in another, outside the United States. It's just the umbrella broaden, and the excess is just give you the higher limits, but you still have that same coverage as you had with your underlying, or we call your primary. That's just different. But she said she understood that, so you didn't have to necessarily yield to me.
I wanted to add a couple other things too, as far as umbrella, because I don't think I explained it. It is a liability coverage, but when I say liability, the umbrella or it sits on top of the commercial general liability coverage as well as the business auto coverage. I did say that? Yeah, you did. Okay. And one other thing I want to add though is it depends. You may be a consultant. And certain consultants have a professional exposure, and that is professional liability coverage, which is totally different from the commercial general liability. You would have to get that, but let me say this, most of the time, your commercial umbrella, most of the time, won't sit on top of that professional liability exposure. And the reason I say most of the time is because most of the time, it may be written by another carrier. And if that's the case, that carrier will not pick up that underlying that exposure from another carrier. But there's some, like maybe eye doctors or whatever, then sometimes there are things that's automatically included for professional liability. But it's a little different, but your agent will be able to tell you.
Okay, great. Okay, Ms. Burgess, explain risk management and how it fits into a business owner structure.
Do we have all day for this one? Okay, risk management is a department, and it's well, let me just explain to you. The Risk Management Department for the City of Memphis, what that department is actually responsible for is preserving the assets of any company. So when I say that, you need some form of loss control. All of that encompasses risk management, meaning that you speak to your employees about different matters. You train them. Just to give you an example, we've had an issue to occur on one of the city's property where we had a contractor to come on the premises. And this is just like your house. When you own a business or you work with someone, we're responsible for it. So what happened, the contractor did some work on the city's premises, and it was actually some hot work. And what happened is a fire ensued, and it was quite a bit of damage. Well, there were some things that that contractor did not do that they should have known to do, but they were not trained. And unfortunately, due to this, they are responsible for the loss. So, of course, you carry, like I say, you carry insurance for yourself first. So what we're going to do, we're going to go and collect under our property carrier to take care of our loss. But guess what our property carrier is going to do? Turn around and subrogate to that subcontractor that's actually responsible for the loss. And it's important to train them because these guys, apparently, they just didn't know. But that's unfortunate. So when you have a business, you have a duty to train your employees on every facet. And the thing is, we understand sometimes we just don't know what's out there. But guess what? Risk management is a department that think of the unthinkable. They'll tell you, I know a lot of times with the city, they get tired of the things that I bring up that could happen. But the thing is, you have to protect yourself. And the only way you can protect yourself is just and there's so much on the internet now that you can Google just to look. Just for example, you have a loss on your premises. You need to have a loss form so you can write down if there were witnesses, phone numbers, addresses, because guess what? The phone number may be cut off or whatever, but the address, you can send them some information, because as soon, if you have insurance, they're going to ask you, okay, what happened? And if you have nothing to tell them, guess what happens? then that messes with your loss ratio, meaning that they may have to pay out, but it could have been something else involved where they could have mitigated, meaning reduce the amount that they had to pay. So it's a lot involved, but once you get involved and you understand it, loss control, you look and see, how your building is. Are there any rugs or whatever with somebody coming on your premises? If they may trip and fall, you have to think of so much, but it's not too difficult once you start it. But those are some of the things. Is that pretty much? Okay.
Thank you. Mr. Powell, high-risk industries, how are they determined and what are some of those?
Would you like me to address within the context of the construction industry or just general business?
General business.
Okay, general business. Well, of course, high risk by its nature from an insurance perspective is that the experience in the insurance industry and the business itself presents unique hazards. Whether it be a roofing contractor was mentioned. Anytime you have individuals working at heights, you have a fall hazard. Roofers, steel erection contractors come to mind. In a manufacturing business, if you're manufacturing products, particularly products that might present a unique exposure once they're sold and the consumer has them, I'll come to mind ladders. Ladders present a unique exposure once they're placed in the market because they tend to be misused. Other higher risk businesses could be any type of sports and recreation, where you have a situation where, in many cases, children or younger people, where they're being exposed to situations in their activities where they could be injured. And so there's, in the insurance world, activities like that have been identified, and then we talked about this different types of businesses being rated in different ways. There is somewhere in the insurance world somebody's formulated list and assigned ratings, and so some of these businesses that have unique exposures that are perceived as high risk, and through the business experience of the insurance world, they take some special underwriting, which that means special information, more information, digging in a little deeper to who's operating the business and how they're operating, and also that the experience of the business, their business practices, are they prone to have incidents that would give rise to potential or insurance claims. I don't know if I answered that correctly, but there are just certain things that the insurance world considers high risk. Just like in the banking business, in the credit business, there are certain people who are considered higher risk. And oddly enough, tying it back to the bond world, a lot of times a great insurance risk will be a lousy bond risk, credit risk, and at the same time, a really difficult insurance risk would be a great bond risk, a great credit risk. So a lot of it has to do to the individual characteristics of the business, what they're doing, how they're doing it, and who's doing it.
Okay, we're getting down to the last 15 minutes of our session. So what I want to do, we're going to allow each panelist to give us a takeaway. As though you're talking to your son or daughter who has just started a new business, what would you give them to inspire them, and what would you tell them to make sure that they're covered? What important information could you give them to take away from this session? After they complete, then I will open it up to the floor again to allow you guys to ask any questions, come up, get some business cards. Please don't forget that they have a luncheon that starts at 12 o'clock.
with the keynote speaker being Mrs. Lisa Price. Please make sure you try to attend that. Once we leave this room, you will have access to Capital. Will be in here next. So we're going to allow Mrs. Burgess to start off, and if you could just give us a takeaway as though we was your children, what would you tell us?
Okay, you're starting your business, and make sure you understand fully everything you're going to do in this type of business that you're about to start. And the reason I say that is because you want to make sure you purchase the most accurate insurance that you can for yourself. And you don't want to leave any gaps anywhere. And another thing you want to do is because most of the time when you have your business, there's some type of contractual agreement. You want to make sure you understand everything you are supposed to do in this contract and make sure you agree with it wholeheartedly, because if you don't, trust me, it may backlash on you. So you want to make sure, whatever you agree to, maybe have some type of attorney that can assist you if there's something you don't understand, and then inquire to them. Because I know sometimes contractual language can be a bit confusing sometimes. So you want to make sure that had covered that. Make sure you purchase your insurance. Most of the time, most companies need commercial general liability, workers' compensation, and business auto coverage. Those are some of the most insurance that most companies need today.
Thank you.
I would pretty much say the same thing that Sandra just said. First of all, I would tell them to, first of all, understand the business that you're getting in. Also understand the necessary coverages that you need. When I say understand, not just because someone told you need this, but understanding what these type of coverages provide you. Also, I would tell them to always maintain your insurance. Have put the insurance in your budget. What I've seen over the years, sometimes we just grab the insurance when someone tell us we need it, but you need to really have your good insurance program. Also, you need to, the type of business you're in, if it's going to be required bonding on down the road, start preparing to put yourself in a position where you can get pre-approved for bonding. The main thing is understand your business and understand your risk and understand the necessary coverage you need and put it in your budget.
Thank you.
I got a little bit of experience, just recently had this conversation. First off, establish a team. You need an attorney, you need a good CPA, and you need a good insurance broker. In running a business, you cannot know everything. You can know enough of the surface, but it is extremely important to have a team. If you're going to do business with any type of government, municipality, if you're going to do business with a large institution, you're going to have documents in place. You're going to have to run your business like it's a business and not a hobby. And so many small business owners start out in the hobby phase and stay in the hobby phase, and then they want to play in the major leagues. I want to go get a government contract, I want to do this, I want to do this. And they ask you for, where's your order? Had heard earlier Steve mention about articles of incorporation, various documents, and they can't put their hand on them. But yet still you want the city to give you a $1 million contract because you say you can do it, but you don't have the items and your structure, your business is not in place. So in order to compete in the game that you're attempting to compete in, called capitalism, you need to have a team, a good CPA, a good attorney, a very, very good insurance agent. Because the insurance agent, like to say in the military time, they're going to protect your six. There are things that you don't know about that can happen. The insurance broker will, if they're good, they'll give you a series of documents to say, what are your risk management? What do you have in place? So if something does happen, there is our responsibility to ask those questions. So if I was going to have the conversation, make certain that you have a good team in place.
I think we've all made excellent points. I would just add a couple of things. One, if I'm giving someone advice, first off, have a business plan, understand, identify what you want to do, how you're going to do it, identify your goals with your business. I've seen really good business plans that really weren't realistic in achieving the goals. So I think you need to have a good plan that will meet the goals you want to achieve. And part of that comes to is just if you're getting in business to make money, I would I've seen great plans and great goals, but the way it's put together, it's not going to be a financially viable enterprise. So I think you have to think of that. Also, as Stephanie and I see in this community, many times you've got great tradesmen, great ideas, but they've not really thought through who they're going to, and identified or thought through who they're going to do business with and how they're going to do business with them. And you see that many times, particularly with small businesses wanting to try to contract with the city of Memphis. And quite honestly, Sandra, the city of Memphis is not the easiest folks in town to do business with, because they're going to have a lot of requirements, and that's part of her job as a risk manager. She's there to protect the citizens and the assets of the city of Memphis, and so they're just not going to let anybody walk in and do business with the city. So you need to understand who you're going to do business with and how you're going to do business with them, and make sure you're capable of fulfilling their requirements. Also, it's been mentioned you need to. We've talked about the rewards to making money, how I'm going to make money. You also need to identify the risks that involved in your business, and try to mitigate those risks. Some of that can be done by insurance. Some of it by your procedures, how you go about doing business. But you need to understand your risk and what you have at stake. Of course, most small business folks, they would tend to have nothing to lose, but at a certain point, after you accumulate a little bit, you begin to have something to lose, and you want to protect that. And the final comment I would make is one that Ronald touched on, is seek out good counsel, seek out good advisors. Ronald mentioned attorneys, accountants, insurance agents. Those are all great. I would add to that a banker. I would also add, if you have a mentor, someone who has some business experience, who can give you some other real-life insight into what you're getting into, seek out other wise counsel. And as Ronald also pointed out, we live in our market. Our market, we like to think we're all capitalists, and there's opportunities out there, and there are for people who are responsible, have a good plan, and they work hard.
Okay, thank you.
Thank you.
Did anybody have any additional questions? Okay, well, let's give them a round of applause for participating.
This ends our session. You feel free to go up to them, get their business card, and make contact. Thank you for attending.